Good morning. Good morning. It is Monday, June 19th, and we are here on the 10K to $2 million funding challenge. Once again, we're starting off week 2 of trading both our funded account alongside our phase 1 challenge. We're up 2% on both accounts, and man, we had a great week last week. It was a crazy week with all the news. But we were able to hunt down a great trade setup and got us back into profit. So good morning, everyone. Beeswax, Deadpool, Chinonso, welcome in, my friends. So glad you guys are here with us. Hope you had a great weekend. Hope you had a great Father's Day, if you are in fact a father. Hope you got to talk to your father and wish him a happy Father's Day. But here we are, we're back. And I had a great weekend. We went to Austin, which is about 3 hours here from Houston. It's about a 3-hour drive from Houston. Drove up into Central Texas, into the hill country. And I got to hang out with some of my kids there. So we are empty nesters now, my wife and I, and so we don't get getting everyone together anymore. Especially now we have 4. 2 of them are now married. Trying to get all the families and schedules and everything in sync is often a challenge. But we were able to work it out for a couple days over in Austin. Had a great time over there, and yeah. So, hope you guys had a great weekend too. What's going on? What is going on? All right. Good. I'm glad you got to talk to your dad. I know not everybody has a great experience with fatherhood. Whether as a child or as a parent, it's difficult, man. It's difficult. But I think I tweeted out, I think it was on Saturday, I was talking about gratitude and just being able to find something to be thankful for. And when you think about your dad, even if you don't have a great relationship with him, there's things that you can point to in your life that you can be grateful for. And here's what I mean. Even if he was just a bastard, right? And just whatever, was a horrible dad. You can be grateful that you had a model shown to you that you want nothing to do with, right? I know what I'm not going to be. I know how I'm not going to treat my wife. I know how I'm not going to treat my kids. Now I've seen something that shows me this is not the way. And so be grateful that you have who you are. The strength of your character often comes through hardship. And I mean, if you didn't have a great dad in your life, you can be grateful that you know what you don't want to be, and you know how you don't want to act. So there's something to be grateful for about that. But hopefully, you have some kind of relationship with your dad still, and you are able to reach out and just express your love and appreciation for who he is and what he's done for you. So anyway, welcome in, guys. So glad you're here. Steven and David, Nassim, good morning. Good morning. All right, let's get into some trading stuff, shall we? Last week was nuts. We had red folder news, multiple red folder news events almost every single day. There was a lot of volatility. We did outline our kind of price objectives, our draws on liquidity that we were anticipating the dollar to hit, and therefore, contrarily, the pound and the euro as well. And they all played out. We weren't able to participate in most of those aggressive moves, a lot of it was because I just don't trade right before I get into a major red folder news event. And so, but after news hit, man, it was just fireworks one way or the other. And there was just really no price, never pulled back to give us a chance. Friday, we had a great trade. We knocked out a 1-2 winner, and we were in drawdown, and we managed our risk. We executed our trading plan, and now we're back in profit. So I drawdown does not scare me. Drawdown does not worry me. Taking a loss or two losses in a row does not bother me. I'm very well acquainted with my system and my data, and I know exactly the maximum amount of losses I've taken over the last 100 trades is 4 in a row. That's not to say I can't take 5 in a row and lose, or 6 in a row. It's a probability, but it's very low. And so I don't operate in certainties. I operate in probabilities. And so when you get into drawdown, you can't change anything. You need your risk reward ratio. That is your edge. That is your life jacket that you're clinging to, that's going to keep you afloat and get you back to dry land or get you back into the boat. So you can't change anything. You just have to operate. You take your A+ setups, and it will do its job. It will do its job, and it did Friday. It wiped out our drawdown and gave us 2% more profit. Nassim, I have a 5K account now. Equity is 4,830, and it says me also pass with you on your trade. Good job, Nassim. Looks like you're in a little bit of drawdown on the 5K, but just stick to the trading plan, stick to your risk reward ratio, and let it do its job, man. Just take those A+ trade setups. That's what you need to be focused on. So I had a couple people say that they were able to pass challenges on Friday from that trade, so I'm glad that it helped. I'll just be a quick disclaimer. This is not financial advice. This is purely entertainment. I'm just here trying to demonstrate on these accounts are demo accounts, right? I am not in the marketplace. None of these are real funded accounts. I mean, this says a 10K funded account, and it is a funded account with bespoke funding. Now, whether they're choosing to copy trade me and do what's called A-book trading on their master accounts using my trades, they don't disclose that. That's their total prerogative. They might be reverse trading me, but to the best of my knowledge and ability, to what I know, these are demo accounts. Both of these accounts are demo accounts. Any account you have where, even if it says funded or phase 1 challenge, you're paper trading. You're not in the marketplace. There is a chance when you're funded that they are copying your trades, but your actual trading is not on a live connected to funded account. They can turn that on and off, and you'll never know. You're just trading a demo account. So everything that I'm doing here is to demonstrate how, if I was funded, if I was actually trading a live account, this is how I would manage it. The payouts are real. The money is real. Like when they send you money from a payout and a withdrawal, it's real cash. It goes in your bank. You can spend it. But the way that you are trading on these accounts, you are connected to demo accounts. Okay. So if you decide you want to take a trade that I identify here in the live stream or on Twitter, that is your choice. That is your prerogative to do so. And any of the results that come from that are on you. They are not on me. If you win because of that, then that's your decision. And if you take a loss because of that, that's also your decision. The main gist of why I'm doing everything that I'm doing on this stream is to show you the path forward, mostly psychologically and mentally and emotionally, the way that a trader sits down at a charts every day to operate in a professional capacity. And this isn't gambling. We're not just randomly picking. We're not just going on intuition based on a gut feeling. We know what an A plus setup looks like. We're looking for that to happen. If it happens, we'll take a trade. If it doesn't, we close our charts and we'll come back tomorrow. That's what Venator means. We're hunters. It's Latin for hunting or hunter. And so that's what we do. We come into the markets. We walk into the woods, the forest, the jungle of the markets. We set up our hunting blind or sit in our tree stand, and we wait for that trophy buck to come out. And if it comes out, we take our shot. We have one shot, one bullet every day. And that's what this whole stream is really all about. So I hope you're learning. I hope you're finding it helpful and useful. If you are, be sure to hit that like button. I would appreciate you doing that. It does help the channel. Steven says, I missed the trade from Friday. Checking it now. Why didn't you choose the 5-minute breaker from 7:55? Let's go back and talk it through. The 7:55 breaker. So the reason I didn't use this breaker, Steven, is because I want to use the last breaker before liquidity was taken. So this was the major, this was the London session high. And as we came up to here, we didn't take it out. But here, we had already broken through and displaced above the London session high. So once that London session high is in, I identify the last down candle before liquidity was taken. And then I wait for that to be displaced through and leave a fair value gap. Now, on the stream, if you go back and watch, I did say you can use this candle as your breaker because it was the last high to be taken. Now, and I even talked through, I was like, you could use this one, you can use this one, you can use this one. And I laid out the 3 different, like, I was like, you could do an entry here, right? And you could do an entry up here. And I said, I would rather take the middle option because it was the one right before liquidity was taken. But I did say, hey, there's that fair value gap up here inside the top one, and you could get a tighter stop, not have as much work to do, but I went with, in my mind, as I saw it at the time, where the best entry for me would have been. That's a totally legitimate fair breaker block and fair value gap right there. And you could have gotten a way tighter entry, but that's definitely a legitimate offer. Yeah, I mean, anytime there's a fair value gap above the one inside your breaker, there is a very real chance it can go up there. And that's not just on EU, that's on any pair. So that's why I always put my stop above the highest fair value gap. So this is the fair value gap. Here's the candle. You could have used the body, or if you had used the wick of the candle that created it, you would have gotten stopped out. I was just being extremely cautious here and putting it above that high. So these 3 candles together created the fair value gap, right? So it shouldn't go back above that candle. And that's why I had my stop there. Ended up working out. It did aggressively shoot up into drawdown. And I had someone message me on Twitter, and they were like, oh my God, I saw it spiking up and it got like almost up there and I closed it out. But then I saw it drop back down and I got back in at entry and then hit the take profit. Well, they were like, how do you manage your trades? And I'm like, oh, I say it every day on here. Once you're in a trade, once you have set your limit orders and you get triggered in, the only thing that's left for you to do is to move to break even when it hits your break even alert. That's it. That's all you do. Once you're in the trade, you have nothing, you have no decisions left to make. All the decisions were made before you got into this trade. There's no further decision making to be done. You set an alert for break even. And when you hit that alert, you move your order to break even. And then you do nothing else. Like there's no more decisions to be made. You're either going to hit take profit, you're going to be break even, or you're going to have a small loss. So that's what I told him. I was like, you can't do that. Like you just lost 2/3 of your trade position size. And then you got back in and immediately put on a full risk position, which is horrible trading in one day. And then when you hit take profit, all you did was gain back what you lost by closing it out early. And you ended up making just a little bit of profit on that. And all because you were emotional while the trade was going on and playing out. So you cannot do that. But for the purposes of the live stream here, this was the trade. We had a draw on liquidity, the London session high. We were anticipating price to run up into and clear out the buy side liquidity up here, which it did. And then once it did, we had a very aggressive reaction back down through, away from, in the opposite direction of the liquidity grab. Once we saw that energetic move back down after liquidity was taken, we identified the breaker that we wanted to use and the fair value gap inside of that breaker. And then we set our limit order as price was closing here at about 8:40, 8:45 is when you'll go back and check Twitter. I called this out live on Twitter. Gave you the entry, I gave you the stop, and I gave you the take profit. And then by around 10 o'clock, about an hour later, we got triggered into this trade. It didn't come down. I had said if it takes out sell side liquidity, we would cancel the order. So it never did. It left this sell side liquidity in place. Came back up. Triggered us in and aggressively went. This is news right here. And I was not expecting the red folder news that we had on Friday was the Michigan consumer sentiment or something like that. And that is not a red folder news event that I avoid. That is not one that typically produces these kinds of moves. It doesn't give you these kinds of moves. And it did give us a reaction, right? It did obviously clearly give us a reaction here off of that, but it wasn't 10 pips worth. It was like 6 pips. You got a quick 6 pip reaction, bam, and then it immediately it took out this liquidity and then immediately reversed away. So it worked out. It was a great trade. I'm very happy with it. But that is what an A+ setup looks like. You see a run on liquidity. You see an aggressive move away in the opposite direction that liquidity was taken. You identify your breaker block and your fair value gap. I usually target around 50% of either the fair value gap or the breaker. And I make sure my stop is in a logical, safe place. And then whatever happens, happens. And so one win. We've taken 2 trades in our first week, just 2 trades. And that is very common 2 trades a week is very common, and that's what most professional traders, these traders that are getting payouts over and over again, and they're getting large payouts over and over again, they're only taking maybe 10 to 12 trades a month. A month. And you divide that over a course of 4 weeks, and that's 2 to 3 trades every week. So I don't have a set amount of trades per week that I try to take. My goal is to identify A+ setups and take them every time I see them. I've had weeks like phase 2. I think it was phase 2 of our first challenge. We had 5 days in a row. We took a trade 5 days in a row. The first 3 were all break-even trades, and the last 2 were winners. So it can happen. There are rare weeks where you will get a setup every single day. And you take them every time you get them. You take them every time you get them. Because your edge is dependent. Your probabilities, your data, your numbers are dependent on you taking every A+ setup that you can find. Steven says, I sent you a trade I had today on EU and one on ES. I'll check them on Twitter. I'll check them on Twitter here in a minute, maybe pull them up and take a look at them and see what we see. But for now, I want to get into some analysis. We're about 30 minutes into the 7 o'clock hour. Let's pop around and see what we can see. Notice I've been sitting at the charts here for 30 minutes watching, just talking, not entering a trade, not itching to get into a trade. It's actually a bank holiday here in the States. It's Juneteenth, which is the day that slavery officially ended here in the States. It actually happened here in Galveston, which is just a little ways down the road here in Houston. It was when the last proclamation, like it had been officially ended, but this was once it was read here in Galveston, that was the last place it had to be like declared and publicly put out. So Juneteenth is a national holiday here in the States. So it is a bank holiday. So I would anticipate just a kind of a slower market. Let's pull up. Let me show you what we've got on tap for our economic calendar here for the week. Today, June 19th, there is no news because it's a bank holiday. Tomorrow, we have building permits coming in at tomorrow morning at 8:30. These times are based off my local time, so this is not New York. This is an hour behind New York. So 8:30 tomorrow, we'll have building permits. Then on Wednesday, we have some testimony from the Federal Reserve. Jerome Powell will be talking, and that could bring some volatility in around 10 a.m. Wednesday. Then on Thursday, we've got more testimony, consumer confidence flash in Euro. We do have some jobless claims. These are medium impact. They could bring in a little bit of push one way or the other, but we're really more concerned with these red folder news events here. So we've got more testimony from Powell on Thursday. And then on Friday, we have no red folder news. So it's kind of a light news week here, and which is cool. I'm totally good with that. We might just get some more smoother sailing waters, so to speak. There is a chance that I won't be streaming Friday morning. I am helping a friend move Thursday after we get off the stream. And I'm going to be driving. He's driving his car. I'm driving the U-Haul truck. And I'm going to help him move up a few hours away from here. And depending on how that goes, I may just stay there Thursday night and not. If I do that, I won't be streaming Friday morning. I'm hopeful that I can make it back, but we'll see. Another friend is driving up with us, and I have to ride back with that friend. So that's why it's kind of dependent on just how all that goes. But that's kind of what the week looks like. I'll be here Monday, Tuesday, Wednesday, and Thursday for sure. And then I'll let you know sometime Thursday on Twitter if we'll be able to do the stream Friday morning. So we'll just wait and see. I'll be watching the charts. Even if I'm up there, I could still put everything up on Twitter if I see a position to take, but I just don't know. I won't have all of the streaming equipment that I need to be able to do this well. So we'll just have to wait. Play it by ear, see what happens. All right, let's start on the dollar. DXY. We're going to start up here on our weekly time frame. Let me just get all this junk off. You can see this is the dealing range we're still inside of. We came down, we've come up, we hit a premium of that dealing range, and we've since fallen back down into a discount. Hey, Ghost, welcome in. So that's, we're just watching. We were anticipating a bearish dollar last week, and we did get that. We had identified, I'll pull this stuff back up now. Let me get rid of all the fibs that I've got on here. All right, so here we are. We were anticipating a run on that imbalance from the dollar last week. So we started up here, and we had said the week prior it had bounced off this bullish order block, and that fair value gap rejected, and then it just plowed right through. We identified that. We still have this fair value gap and this daily order block down here, and these relative equal lows into the monthly, this big monthly fair value gap down here. So still slightly bearish on the dollar. We might see a little bit of pullback. We have a fair value gap that we're inside of right now on the dollar. So I'm going to let me identify that for you. So right here at the bottom of the old fair value gap is where we are currently residing into. So it's reaching back up into the fair value gap it left from Wednesday's big down move, and then Friday kind of just chopped and consolidated a little bit. And so now Monday, here we are pulling back up into that. Perhaps we fill this in today. Maybe tomorrow we get the high of the week, and then you see continued downside. If it wants these highs up here on the daily time frame, you would anticipate that it wants to grab sell side so that it can pick up orders and run these highs up here. So I'm a little bit for the week bearish on the dollar here. So I would anticipate some kind of high of the week either today or tomorrow inside this fair value gap, or maybe a little bit higher back up into this volume imbalance, something like that. And then Wednesday, Thursday, Friday, we see our weekly expansion down into at least this fair value gap, and then we'll see how it reacts off of this daily order block here. Inverted fair value up on the daily, and then go for the lows. So it very well could, when Steven is talking about an inverted fair value gap. So anytime you come to a fair value gap, you're anticipating price to have some kind of response off of that fair value gap, like you saw right here. You saw this candle come down, blow through that volume imbalance and then hit this fair value gap. And what did it do? It filled that fair value gap in and then just had a big aggressive pullback away. And likewise, on this volume imbalance here, you can see it acted as resistance or support, acted as support. But then as this candle pulled up, what happened? It pulled right back up into this volume imbalance and acted as resistance. So that volume imbalance became inverted, meaning here you were anticipating it to act as support. Once it broke through, you would anticipate any return to that volume imbalance to act as resistance, and that's what you see here. So likewise on fair value gaps, you would anticipate something similar. You would anticipate most fair value gaps in a bullish uptrend. Any fair value gap that price pulls back to, you would anticipate it, if price is going to remain bullish, that it would be respected and act as support, which is what you saw right here. Once that fair value gap gets traded through, anytime price returns to it, you would anticipate the opposite. You would anticipate that fair value gap and now acting as resistance. And so Stevens' analysis is that, and it's not just his. I mean, any smart money trader is going to look at this and go, hey, that fair value gap from Wednesday, May 17th, it's likely it could pull up there and we could see the high of the week in there right now. So we'll watch and wait, but that is an accurate view of where we currently are in price, and we're definitely now back in a bearish move down. We moved up into a premium, and now we're moving back down. We're currently in a discount of this leg down and of the dealing range. So here's our dealing range right here. This is our dealing range, low to high. That's our dealing range. Until we're out of that, we're marking this as a premium up in here, and we're marking this as a discount down in here. So we're heading back down, and we are pretty, I wouldn't say pretty bearish. We're just bearish on the dollar. We're going to anticipate for the next, at least for this week, short-term bearishness, which would mean we would be looking, if we're anticipating the dollar to come up today, maybe tomorrow, put in a high of the week, you would anticipate on the pound and the euro the opposite. You would anticipate a pullback to the downside for a low of the week. And so you can see in here on the 4 hour, you have this big sell side imbalance right here, which correlates, reaching back up into that does correlate with your inverted daily fair value gap right here. This big block is the daily that we're currently inside of right now. So we'll just, you could anticipate some kind of pullback up into that. If we drop down into the hourly, what do we see? A no wick candle right here, which it has already taken out. And we know price does not like to leave no wicks behind. But this big imbalance here, you do have this breaker right here. So you see these 4 candles with this volume imbalance came down. We shot up. We took out buy side liquidity right here, an old high, and we have displaced through it. And there's obviously fair value gap right here inside that area. So maybe that could be around the high, that volume imbalance, this fair value gap, anything up in here. We'll be watching and waiting and seeing what happens with price. But you would anticipate this volume imbalance and this fair value gap maybe today, I don't know, could be tomorrow or Wednesday. We plow back through here, and then once we get through here, then this weekly becomes much more likely, and these relative equal lows right here become even more likely to be tapped into. Again, if it wants to run the daily highs, the daily relative equal highs that are around, let's see, what were they up here? Around 106. the draw on liquidity currently appears to be this sell side. So that's where we'll watch and wait for the dollar. And let's jump over to euro dollar, and we'll do the opposite. We will see this as an opposite. So you've got relative equal highs up here. You've got a weekly big volume imbalance right here. It left that in place back in April. This is a weekly time frame, so every candle represents 1 week. You can see that this is it's more likely to want to draw to the buy side. We're in an uptrend. We just put in a higher low, and so we would anticipate a new higher high being made off of these highs. You can see this large candle from last week that we had has left behind quite an imbalance. And on the daily, it looks basically the opposite of what we just saw on the dollar. You have a big fair value gap right here that we're inside of currently. On the top side, we're inside of a weekly fair value gap right now. And you can see last week price spiked up through it, but the body closed inside that fair value gap. So until we clearly close above this, it could still hold price down on the euro. We are inside this daily right here, and then again on the 4-hour, big imbalance here, another one a little bit further down, which lines up with this bullish order block right here. Excuse me. So we'll be watching and anticipating a deeper drop today or tomorrow into this area here that then potentially will move us higher. Again, on the euro, there's a no wick candle here on the hourly time frame, and we know price does not like to leave no wicks behind. And so you could anticipate a drop down into that level there as an initial draw on liquidity. But you've got that fair value gap along with it. There's another one down here as well. So we will just watch and wait. Euro pound, again, very similar story. Not a whole lot. You can see we've moved up into this monthly. Let me jump up here to the monthly. This is a monthly fair value gap. This is a monthly breaker. We're about 50% of the way inside of those positions there. We have tapped up just into this weekly fair value gap here. Just tapped into it last week, and which is about 50% of this monthly fair value gap. Again, you can see the imbalances, the fair value gap here below. Another big fair value gap down here. And then on the 1 hour, you have no wick candle, all under here. So you would anticipate, again, putting in a low of the week somewhere down in this area. And then if price wants to reach higher, it's going to want to come lower first. It does not have to, but this is just typically, all right? These are just generalizations. I'm just putting out my bias. These are the areas generally where I would anticipate price to put in a low of the week before it wants to return. If it wants to go higher, typically you're going to look for a low of the week down first to be made before it runs higher. All right, so there is your pound. Jump over to gold. Gold did hit our weekly draw on liquidity and immediately displaced higher. After it hit that, I tried to find an entry on gold last week to take advantage of this drawing liquidity and displacement back up. We couldn't find one. It just ran away from us. And on Thursday, I believe, was when that happened. I really wanted to get that move back up, but it just didn't play well with us. Our 30-minute fair value gap in here, once again, held price down on the daily. So Friday ran up into that 30-minute, fell off. There was also a nice play on that on Friday, and it did not give us an entry as well. But inside this large 4-hour, we're just inside this huge ugly range right here. We're just trapped. Gold is just currently trapped. So I'm only going to be interested in gold really at these extremes. If gold comes up and we get back down around these extremes, I'll be watching to see what happens. But currently, there's just really no strong direction or bias here. So I'm not super thrilled with, again, I'm just going to watch it when it gets to these extreme areas inside that range. Then we'll watch and see how it responds. Does it give us displacement, etc. US 30. Here we go on US 30. We have closed above the range, this high right here. So we would anticipate a low of the week being get a little bit of a pullback. Perhaps Tuesday, tomorrow, since today's a bank holiday, this candle's not going to do anything. But tomorrow, perhaps you get a drop down, fill in some of this imbalance here before you aim for some new buy side liquidity a little bit higher here. On the daily, we're back inside the fair value gap currently right here, and this bullish order block. So again, I don't think price is going to really move much at all for any of the indices today, since it's a national holiday here in the States. Excuse me. So we'll just watch and wait and see what comes. But that is, you would anticipate, again, maybe a low of the week somewhere inside this order block if it wants to run higher. Bitcoin, I don't trade it, but you can see this is the trade. It popped down. I did this analysis for someone on Twitter. There is a beautiful weekly imbalance here. This order block is the one I identified for price to reach down into when we were inside this consolidation. It had left these relative equal lows with that order block being not tapped into. And so when you drop down to a 4-hour, it just was a very clean, easy play. Relative equal lows, consolidation. You would anticipate a run into this order block here, into this fair value gap right below it. You could just set your stop right above those highs and anticipate. This is called a turtle soup play. So a turtle soup play is, so our A plus setup is liquidity gets run and then we get displacement away, right? And then we get in. We wait for confirmation. A turtle soup play is when you anticipate a stop run and you get in on the stop run and you just try to get in at an extreme high and then you just wait for price to displace after. And that was kind of my trade setup on this Bitcoin trade here for the gentleman that had asked me on Twitter. I said you could just do a turtle soup play where you're going to put in a sell. So you're anticipating a run on buy side liquidity and then displacement away. And so if you're anticipating that, you could just put a limit order somewhere up in here, put your stop above in a logical safe place above an order block, fair value gaps, etc. And then you're anticipating the displacement after buy side is run. And you would be interested in these lower, your first interest is this lower, these relative equal lows. And then you have this daily order block that you would want to see price probably get tapped into. If it's going to go higher, it's likely going to move down first. So it runs buy side, runs sell side, and now we've had a pullback back up. So just price moves the same on all of the assets. It really does. It's the same logical movement of price. Liquidity to liquidity. That's where price moves. So if you can identify where price is, then you can identify what the next draw on liquidity is. You have really put yourself in a position to identify high probability trade setups. All right, let's go back over to euro dollar, pound dollar. Those are the two we're probably going to be watching the most this week because gold is not great right now, and US 30 is a national holiday. So if we're going to get any kind of a setup today, it's going to be likely here on euro dollar or pound dollar. So interesting enough, we have taken out Friday's low, and we're getting some displacement back up away from that, back up into this fair value gap right here on the 1 hour time frame. If we drop down to a 30-minute time frame, you can see this is going to be where sell side liquidity is. We've dropped down into it, and now we're pulling back on the 15-minute time frame as well. You had these up close candles, displacement away into sell side. If you're anticipating price to be bullish, then this would be your draw on liquidity, and price is moving up, but you can see it's not energetic. Look, it's just like trickle, 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 trickle. We haven't had these big candles that have really moved us further down. So there's no, for me, there's no, this is not a sign of anything. Now, if we get some big candles that displace above these highs, I might be more interested in thinking about, oh, we ran sell side so that we can go higher. But currently we don't have that, and we would need a close on the 15-minute above here. I don't think, yeah. Yeah, there's nothing there for me. Nothing popping out just yet. Pound taking out its sell side liquidity here and then reversing back. Let's see what we see over here. Hey, Jack and Corey, welcome in. Nice trade on Friday. Thanks, mate. Appreciate it. Pound. We've had a little bit of run on liquidity here. But I don't see anything. There's no aggressive displacement currently that would make me think we want to get into a trade here on Monday morning right away. So we'll just watch and wait. All right. That's kind of our analysis. We're about an hour into the stream here now. The 8 o'clock candle will close here in about 10 minutes. And we'll see if we get any kind of movement today. Again, it is a holiday, so here in the States, so I don't, typically on bank holidays, you don't get a lot of volatile price action. And I don't mean like news volatile, but just normal market movement. You don't really get that on bank holidays. So in my normal trading plan, like if I was not doing this stream for you guys every day, I committed to be here Monday through Friday every day because I want to show you what professional traders do and the way that they approach the markets, the way they think about it, the way that they pass challenges, the way they get funded, etc. If I was not streaming, I would not be at the charts today. And not just because it's a bank holiday. I just typically don't trade on Mondays. When I look at my data, I lose way more often on Monday than I win. And Monday and Tuesday are typically like where price is reaching to put in a high or low for the week. It's usually in the opposite direction of your overall bias. It can be choppy, whatever. There's lots of different reasons, but Monday, it's the opening of a new weekly candle. You're not typically going to get your weekly expansion on your Monday. So if I wasn't doing this live stream, I wouldn't even be trading. I wouldn't even be sitting at the charts. I'd be sitting on the balcony with my wife, sipping coffee, enjoying the sunrise. Um, but it's not what we're doing now. I'm here just helping you talk through the process. I'm helping you understand this is what we do. But once you become profitable and you are only taking a couple trades a week, you can eliminate the days that you are not historically good on. So for me, that's Mondays. Um, Trading 4 days, like if I was just trading and that's all I was doing, 4 days a week for a couple hours a day, change your life. It's pretty amazing. Beeswax says, appreciate you doing this. Yeah, guys. I love sitting at the charts. When I say that I would not be trading on Mondays, I promise you, I would still have it open on my phone, even if it was with my wife. I love watching candles print. I love watching how the market moves. Now, I wouldn't be taking a trade, but I would still be keeping up with what's the market doing? Like, how is it moving right now? How are the candles printing? What are the levels? Where are we at? What's my bias? Marking out. Oh, well, I bet I would be interested to know what does price do when it reaches this level or this area of liquidity. So, um, I appreciate you guys coming here and watching this. Um, I really do. I hope it's helpful, and I hope that it is helping you grow as a trader and really understanding how to operate in this career and treat this as a business. So again, I'm grateful for you guys. If you haven't yet, hit that like button for me. Um, we're growing slowly but surely, approaching almost 200 subscribers. I think the last time I looked, we're getting close to 200 subscribers. Maybe about 15 more people or so, something like that, on YouTube. And I think we're right around 300 on Twitter. So my guess is when we pass this next challenge here and we get another payout and buy a larger account, we'll get another bump in people showing some interest in what we're doing over here. As far as I can tell, you would need to be paying uh, somewhere between $80 and $150 a month for private mentorship that offers what I'm doing here on YouTube for free. And what I'm doing here on YouTube every single day, there's not mentors that are doing this in their private group every single day. So, and I'm not saying that to pat myself on the back. I'm saying that to say, take advantage, guys. Take advantage of this. I don't know how long. Well, I'm going to do this until I hit at least to the end of the year. We'll see how far we are by the end of the year. So we've got 6 months here at least every day. So that's going to be a lot of days and a lot of hours spent watching the charts together. And hopefully by the end of that, you'll have grown and hopefully gotten funded and starting to get some payouts as well. So that's the ultimate goal, is to take the number 90% of traders are failing challenges. If I can make that 89%, that is a lot of people. At 1% of how many tens of thousands of people are out here failing these challenges every month. You look at the website traffic. So prop firms have been putting out recently. They're like, hey, we're one of the fastest growing prop firms, or we're in the top 10 of prop firms. And they're basing it off of unique visitors to website traffic. And I think my Forex funds is still number one, FTMO is number two, and the funded trader is number three. My funded FX is number four, which is the only firm in the top four that is a no time limit firm. And I think a month or two ago, they weren't even in the top 10. So this is how fast no time limit firms are growing. But they're unique, like they're getting millions, hundreds and hundreds and hundreds of thousands of people every week to their websites. So, you know, 1% of a million is 10,000, right? So if I could help 10,000 people learn how to stop failing challenges, that's a lot. Quite a lot. All right, here you can see I'd said I don't think this is going to go higher. I think this is going to go further south before it goes higher here. I'd be interested to see if you get a run on any of this liquidity from overnight, these London highs, or just even some highs up in here, what would happen. But you can see price reacting off of that fair value gap, reaching up into this 30-minute order block right here and pulling away. Pound likewise is reaching back up. Did pound to grab any? Grabbed a little liquidity right there. What do we see? What do we see? So you can see there was some buy side liquidity right here and right here. It's reached up into getting displacement away. So we'll watch this little area. We grabbed a little liquidity, but not much. So there's just nothing happening right now. We're about to close out this hourly candle. So nothing cooking at the moment. We're just watching. Just watching. I've been tempted so many times to put on trades on this challenge that are not this setup. They're just a couple of different other setups and stuff that I see. Like I'll be sitting at the computer in the evening and looking at my other accounts, and I'll be like, man, I want to put this trade on this account. But I have not. I have been steady as an oak. We're only trading one setup. You only need to master one setup. Maybe in a couple months, maybe when we're six-figure funded, maybe we'll be like, okay, we've done one trade setup. I showed you how you can take one trade setup, start with a 10K account and get it to six figures, right? So maybe after that, maybe I'll introduce another concept into the system. But I don't know. I don't know. Maybe not. It's kind of cool just knowing that you could take it all the way to 1 million or 2 million in funding. Also quite an achievement. So this is all very possible. I see ICT put out a somebody tweeted, I don't know who it was, tweeted me, but he put out a, hey, who's your favorite YouTube streamer? Tell them to document their favorite trade setup and take a live execution or something. I've been doing that for a month already. I have a month of live streams, just over a month now of live streams, where we have, let's see, we had let's see, we're seven. I think we have 7 winners so far. I need to go back and look. I think we've had 7 winners so far. And that got us our funded account. It got us a payout to buy a new challenge off of 7 winners. but they're all there. I document all of them. So if I find one, it'll be documented. Maybe I'll cut it down and explain why we took it. I am going to take this trade off here. It just cleans up the charts. All right, into the 8 o'clock hour. Our last, last hourly candle closed bullish, leaving behind a little volume imbalance up here. We're heading back north here as we open up. So we'll watch and wait. Again, I never have a super strong confidence in Monday. In number one, even finding a good setup or that those setups work out. Really, the Monday trading session for me is just, what did Monday do? What was the liquidity that Monday reached for? And how does that set us up for the rest of the week? So this is the business. It's not trading every day, but it's looking at the clues. It's being a detective, a hunter. Where basically right now we're like, hey, where is the deer? Where's that trophy buck in the woods? Which way is he moving? What water hole is he going to? Is he looking for a nice pretty doe to lay down with? Like, what are the signs in the woods that there's a trophy buck around, and where might he appear? That's kind of what Monday's doing. It's the stalk. It's the hunt. The hunt begins on Monday. And so we're going to look and try to find what's the best tree that we can sit in for the rest of the week to find him. And we're not anticipating that we're going to find him today. We're just trying to find out where he might be and where he might be going. So it's just a whole lot of boring stuff. Somebody sent me, I think it was Steven. Let me go in. Nassim. Nassim says, today I feel boring. I feel boring every day, Nassim. Trade setup or no? It has become a monotonous. This stream has actually helped me because it gives me something to do with my brain and engage in a different way. Because if I wasn't doing this stream, I would be way more tempted to just introduce other distractions into my brain while the trading session's going on. Trading should be boring. Ultimately, when you become profitable and you become consistent and you know what your A+ setups look like, trading should be boring. Because you're just sitting around waiting the vast majority of the time. You're just sitting around waiting. Let me see here. It's funny. I get this. So I'm looking at my Twitter messages. And the first one is from somebody that says, having trouble passing your funding challenge? We have a huge sell for our challenge passing service. We can pass any firm. Takes us on average 4 to 11 days per phase. We can pass certain firms in 24 hours. All firms accepted. Account management. If you decide to manage the account with us, we will refund the challenge passing fee from the first payout. If your account has negative balance, we can bring it back to break even for a very affordable price. We work with any account as long as the drawdown is less than 7%. For more information, DM Dr. Dollar. Maybe I should start a pass your challenge service. Like, I don't understand why these people, like, they're just scammers, man. Don't pay anybody to pass your challenge. Number one, you're going to get in trouble. These funded accounts do not, they're not going to be okay with that. They have violated people before. And if these people can pass challenges, they should just trade your own damn account. Like, you don't need to be having other people pay you to pass their challenges. I understand the concept behind it. I understand why it's so attractive for people who can't pass a challenge and get funded. It sounds so good. Oh, I'll just pay this guy, these people, to pass my challenge. Dangerous, dangerous, dangerous. Don't do it. Stay away. Just sit here and watch and learn. You're going to be way better off in the end. You don't need anybody's help ever. You can just do this yourself. Let's see. You got another message here. I got another. I got another solicitation from a broker. We've been checking out your content and we are very impressed. We would love to have a quick call to discuss a lucrative business opportunity. And I only have 200 YouTube subscribers and 300 Twitter followers. So what does that tell you about this broker if they think I could help them right now? I have no following. I mean, you guys are following, but in the context of social media followers, I'm nobody. It's funny. All right, Steven. Let me look at your charts here, buddy. Hopefully you're still on the stream. Let me pull this up. Hi, bro. Took this one on my challenge. What do you think? Euro dollar. Yep. Waiting. All right. Cool. Well, let's look at this real quick. Let me pull this up. Here we go. Steven sent this in. So you can see the overnight here, and he identified a run on liquidity as we come into the London session. It did grab liquidity. It wasn't like a super quick stab up. This was a quick run up. So you can see it was doing not much. And then as we come into the London Open, you can see it starts running up pretty hard towards the Asia highs. So it runs the Asian highs right here, and then you get displacement away. And then you get, I guess this up close candle here is the one that you were using as the run on liquidity, because it did stab up a little bit higher there. I'm guessing that's what you were using here as a breaker. And then I'm not sure, there's a fair value gap displacement here. You had a break of structure. Fair value gap inside. There's not a fair value gap inside this, so I probably wouldn't have used this candle. If I was looking at this as a stop hunt, and this trade ended up working out, so good trade. Any trade that wins is a good trade. If you're just using that as a breaker, there's a fair value gap on the 1 minute. I see. Okay, so you're using the 5 minute, and then you have a 1 minute fair value gap inside there. I see now. Gotcha. You're using this as an order block. Okay, now I'm reading your chart. So this is not the setup that I trade, but this is a setup that Steven uses. He's using a order block. So this is your 5 minute up close candle that displaces and changes structure. That becomes a bearish order block. There is a fair value gap on the 5 minute. That price came back up at 2, ran away. but he has identified a fair value gap inside the 1 minute that as price would come back up into this order block, he would enter. So that's a good use of an order block. And it looks like you got, what is that, a 1 to 3, 1 to 4, something like that. So good trade. Again, that's not the setup that I'm using here. I do use similar setups in my other strategies. I just don't use it here on this stream. But that is, I mean, it's valid. You had a run on liquidity. You have an order block. You identified a fair value gap. So well done, mate. 1 to 3, yeah. 1 to 3 is good, and it worked out. Knowing that your drawn liquidity was under these relative equal lows, that's a logical place to have your take profit is just below there. You could have also identified yesterday's low or Friday's low as the further drawn liquidity, which you did down here, but you were happy with your 1 to 3. So looks like your analysis is on point, and looks like you executed that well. So good job. Well done. Took a partial at the equal lows. Yep. I'm not a partial taker. As soon as you take a partial, you reduce your overall risk reward ratio. And so I used to do 1 to 3s like you have set up here, and I would take a partial like halfway through or so. And it came out to 1 to 2. And my win rate at 1 to 2 is way higher than my win rate at 1 to 3 with a partial. So I was just like, well, why have a lower win rate and have a true 1 to 2 risk reward ratio by aiming for 1 to 3 with a partial? So just take, from me, again, I'm not telling you that you're doing this wrong. I'm just telling you, this is how I think about it. 1 to 2, easy low-hanging fruit. I don't have to take a partial. I take my full position off, and it's the same as taking a partial and holding even longer for a 1 to 3. It's basically the same. But I don't have to wait longer. I don't have to take the risk of it turning around before it gets to 1 to 3, et cetera, et cetera. So that's why when I went to 1 to 2, like take your full take profit at 1 to 2. It doesn't matter if price runs another 50 pips or whatever it does. The chances that you're able to identify those huge runners on a consistent basis is very low, but your ability to identify a 1 to 2 risk reward ratio consistently is way higher, and you can make a crap ton of money with just taking that low easy hanging fruit. So I think I took 1 to 2 RR. It's the best trade. It is the most easy trade, and it's the one that's most easily executable to get you to profitability. Don't try to hit home runs and grand slams. A bunt single is fine. A base hit is fine. A solid double off the wall is fine. Like, you don't have to hit home runs. These low, easy hanging fruits, man, it's a great trade. So good job on that one. And I think he sent me one more. Let me see over here. Let me pull this down so you're not looking at all that. This one on the other account. Let's see. Let's pull this up. I'm looking at this for the first time here. ES. We're on the 1 minute time frame. I mean, price is fractal, but I don't trade on the 1 minute time frame. But let's just take a look here. So, looks like this is today, London session. You had a short pullback. This looks like an optimal trade entry area here. You had a volume imbalance inside an order block. Yeah, so I mean, this looks like a decent trade. You have your drawn liquidity that you've identified. You have an OTE here. So as this this leg down, you're going to be looking for price to return into a premium. And if you were to draw a fib on that, you would see that this is right inside the probably 70 area, 0.70 area. That also lines up with a volume imbalance, also lines up with a different volume imbalance a little bit higher. This is also a breaker. So you had two down closed candles, you had a run on liquidity, and then you had displacement through with a fair value gap inside. This is the trade I would have been identifying. These two down closed candles with the fair value gap inside, I would have targeted 50% of that inside that fair value gap. Maybe gotten a sniper entry there with no drawdown, maybe not gotten triggered. But again, it looks like you have a good draw on liquidity on the sell side after you enter. And you took out your buy way down here. So good trade, man. Again, identified a change in structure. You identified where your draws on liquidity were. You traded in line with your bias and where price was likely to draw to. You identified a good place to enter. Your stop loss is at a safe, logical place. So yeah, another great trade, man. Great trade. How are you on your accounts? You said you took these on your challenges, your funded accounts. What's going on with those right now, Steven? How are you sitting in profit and drawdown? Are you about to pass, get a payout? What's happening there? But those are two good trades. I'm happy to anytime you guys want my opinion on analysis or a trade setup, you're more than welcome to shoot me a DM on Twitter. And or if we're here on the live stream, you can put it in the chat and I can pull it up on here and just talk it through with everybody as well. So on this account, I'm with Apex. On the ES account, he's trading futures on Apex, and they have stupid rules with trailing threshold. Yeah, don't they have isn't your most of the futures prop firms, I don't know how those guys trade because their drawdowns are minuscule. And often they're trailing, and there's some that even don't let you make, if you make over a certain amount of profit in any one trading session, they penalize you, which is really weird. I don't know why people are using these futures accounts to trade like that. It just doesn't make any sense. You can trade the exact same way on Forex pairs with prop firms that are giving you 10 or 12% drawdown with 5 or 6% daily drawdown with no time limits, no trailing threshold or drawdown. It doesn't make a lot of sense to me to trade the futures prop firms right now. But up on Apex, down on my funded FX 1%. Well, don't worry about the 1%, man. You got that. It's no big deal. Just stay consistent, stay true to your risk reward ratio, execute your A+ setups. Cool. So Apex has trailing drawdown, a 3% trailing drawdown. Are those both challenges, or are you funded on Apex? Yeah, that sucks. It's equity based, so it's based on your high water mark. Basically, they want you when you get up to close out your trade and not hold it, and they penalize you for holding profitable trades by raising your drawdown. Well, good luck on your challenges, Steven. Based on the two trades I've seen today, you should have no problem. Just stay consistent, be patient. Don't look to take a trade every single day. and taking multiple trades a day is eventually probably going to bite you in the butt. So that would be my only caution is don't rush, be patient, only take A plus setups, man. Like don't be rushing, trying to get them done fast. Euro dollar, man, this is just a brutal morning. Just not much happening here. I'll stay on until the 8:30 open, but you can see the bank holiday coming into full effect here, and the complete lazy price action that's probably just going to chop and chop and chop all day. We'll stay on. I'll stay on for another. Let's see, how long have we been on? We've been on about an hour and a half. I'll give it another 15, 20 minutes, and then I'm going to have to. I'm not going to be able to take any more of this. This, what is this? Like nothing. Just creepy crawling. I would doubt we see aggressive moves. If we see an aggressive move, it's going to be after we take out one of these highs. Either the London high or the Asian high here. And that's probably not going to happen in the next 20 minutes, I'm guessing. So we'll watch and wait. Steven says, I'm patient thanks to you. I also saw ICT live stream from Friday and learned a lot. Was that the 6-hour stream? I saw he posted it, but I have not gone back through. I think that was the one you're talking about. I think he posted like a 6-hour long stream. Which probably, you're probably right. You probably did learn a lot. Like, you can, that dude's the GOAT, man. Like, I saw people wishing him a happy Father's Day. Happy Father's Day to the father of all modern day traders, SMC Money. He's the GOAT. He really is. The reason I'm profitable is because of his concepts that he taught and how I've adapted them and used them to in my own trading plans. And so he is definitely he's the man. He's not perfect. He obviously has he's a flawed human being, but we all are. We're all flawed human beings. But he definitely can see things in the market in a way that no one else can. And he's been doing it for decades. Of course, I accidentally lost mine because I didn't have a stop loss. Always have one, but I was watching the screen and losing service for a couple hours. Oh no. Corey, why would you not have a stop loss on? Is it because you lost service and you weren't able to place it, or you just didn't place it and by the time you got back on, it got hit? Dang it, man. I'm sorry about that. That's why I use my trading assistant. I will not enter a trade without every entry and exit planned. Like when I put a trade on, it has my entry, my stop loss, and my take profit set before I ever enter the trade. Those are all set. I used to trade and enter trades, like get in on market orders or whatever. I never use a market order anymore. Only limit orders. Limit orders mean that I've identified where I want price to move to, And if it does, I will enter the trade. And if it does not move to my price, if it does not move to where I want to get in, there is no trade. And if it runs off without me in the direction I thought it was going to go without giving me my price, fine, cool. Don't care. I'll come back tomorrow. So I only use limit orders. I do not use market orders. And when you use market orders, you can forget to put a stop loss in. And then you can lose an account. And then you can start over. So, I mean, I understand why you said it's only $37. But man, that was your account, bro. It's a big deal. It's not fun to lose challenges. And while $37, it's not a life-changing amount of money, what you lost was time, which is the most valuable thing. It's priceless. Time is priceless. And so that's what you really lost. The monetary loss, not that big of a deal, but you lost time. But hopefully you can use that loss as a lesson, use it as a learn, and, hopefully that is not repeated again in the future. And be careful because I put you on ICT tweet, the one with the mentor execution. Oh, that was you who tweeted me out. Okay. Well, I hope there's a flood of people on the live stream. I have commented on his tweets before. I picked up some followers on Twitter. I'm not sure how many live stream viewers we've gained from it, but you guys are all more than welcome to retweet or introduce my content to others on Twitter or YouTube. I would love that. That would be great. If you're getting some value from that, that would be great. But yeah, we're if we get a setup that his challenge was, hey, have your mentor record their favorite setup with a live execution. I've already done that for the last month. There's 7 trades that we've won in the last 30 days. At least 7, maybe more than that. I don't know. I need to go back and look. But a couple trades a week over the last 30 days. There's 7 prime examples. But if we get one this week, maybe we'll cut it up into a little short video and put it on why we took it and why it's the only. I think the challenge was if you could only trade one setup for the rest of your life, document it on YouTube and put it out for everyone to see live. So, but yeah, I've been doing that for a month, and we'll do it this week. If we get one, we'll do it this week. I do it all the time. Ayub asks, how do you calculate stop loss and take profit? I'm not sure who that person that just said hi, Brad, is, but hi. Be interested. That feels a little scammy to me, but we'll see. I have been getting a ton of DMs from bots in my Twitter. So I don't think we've had one on YouTube chat here yet. So I'm not sure. I don't even know how to say your name. It's a very Asian name with lots of different dots and tildes and things on it. So I'm not even going to try to pronounce that. Oh, it's Non. Non, man, you're freaking me out with your profile pic and the different name on there. So welcome in, Non. Okay, I'm glad you clarified. Oh boy. You had me stressed out there a minute. I was like, I do not want to try to say that name. it would be embarrassing for me and probably for you as well. So, but glad you're here. I calculate stop loss and take profit. How do I calculate that? If you're asking me how I calculate my lot size, then it's all based on how big my stop loss is. So we had a trade. I'll just use the trade setup we used on Friday's winner here. Let me go back. So what we did on Friday, this was the trade we took on Friday. We entered right here, and my stop loss was above this. So, and my take profit is easy. The way I calculate my take profit is 1 to 2, and I actually go a little bit beyond 1 to 2 just to cover my spreads and commissions on the trade itself, because I want to have a true 1 to 2 risk reward ratio, and there's a cost of doing business that's called spread and commission. So to cover your costs plus your profit, right? So I go a little bit beyond 1 to 2. It's like usually 1 to 2.1, something like that. So that's how I calculate my take profit. It's 1 to 2 every time. 1 to 2. Nothing else. I don't take partials. I move to break even when price is around around 1.5. I'll move to break even and then just full take profit at 1 to 2. Now, the take profit is based on how big is my stop loss. So in this instance, I had a 10 pip stop loss on this trade. It was placed above the swing high. So this is a swing high right here. And this is also the candle that created the highest fair value gap. So I use that. It's a logical, safe place to put my stop. If I am right, price will not come back up here because it's already grabbed liquidity from over here. So I'm just placing my stop loss in a safe, logical place. And however far away from that, in this case, it's 10 pips. You see that 10 right up there, right there. There's a 10. It's 10 pips is my stop loss. So my take profit is 20 pips, or just over 20 pips, because I'm going to account for my spread and commission that the broker takes out. So that's how I do it. Now, how I actually calculate the lot size is I actually have a trade assistant on my MT5 terminal that calculates my lot size for me. I just put where my entry is, I tell it where my stop loss is, and it calculates how many lots to use for that position to risk 2%. So if you're new watching, my trade setup or my trading plan is that I risk 2% per trade. And on a 1 to 2 risk reward ratio, that means if I lose, I'm going to lose 2%. If I win, I will make a profit of 4% per trade. So that's how I do that. I don't know if that answered your question or if that's what you were asking, but that is how I do it. My stop is determined on where I believe price does not need to go back to. And if I'm right, it won't hit it. It's in a safe, logical place. My take profit is 2 RR of whatever size my stop loss is. I hope that answered your question. If that's not where you were asking, just let me know, because I would prefer to actually answer the question you're asking and not just assume that that was the question. Oh, sorry about that. Just reading a couple other messages on Twitter here, and course, as I'm buying a new one tomorrow, Steven, if you trade on MT4, I can help everyone with a tool that calculates risk. It's like if you want to enter with half or 1 or 2, this tool calculates everything. Yeah, I use it's called Trading Assistant, I believe. Let me look. Yeah, it's called Trade Assistant MT5. And I believe they have the exact same one on MT4. But it lets you drop in lines and it calculates. I would show you on this stream, but I have 2 computers and my streaming camera and stuff is not set up over on the computer that I trade on. It only has MT5 on it. Like, I mean, it has obviously like Google and stuff, but I don't have any other software on it. I just want it to run and trade on. And so I don't, but it's called Trade Assistant. And I believe on my other streams, I have actually put this up. If you go to MT5 Marketplace, I'll see if I can find it again for you. Yeah, here it is. It's $100, but it is so easy to use. So this is it over here, and yeah, I mean, like you can literally you can have trailing take profits. You can move to break even after a certain amount of price moving in your direction. You can trade based on risk or balance. You can set your lines. It auto calculates where you're like you move your entry and your stop loss wherever you want. You can move your multiple partials. It makes it very, very easy to trade. But it has all kinds of cool features in there. Limit orders, trailing stops, break even. It's very, very easy to set up and to work with, but it just sits on your MT5 window, and you just drop your lines on there, and you're done. Like, you don't have to do any of the mental work to figure it all out. So anyway, there's others besides. That's the one I use. There are others available on the marketplace. And like I said, they have that for MT4 as well. They have a version that works on either one, depending on what you want to use. But it's too complex. It's really not that complex. I mean, when you first look at it, you're like, oh my God, I don't understand all this. I don't even use the break evens and the trailing stops and the partials. I don't use probably 90% of what this trade assistant can do. I use it basically. I put in what my risk percentage is. In this instance, it's $200 because I have a $10,000 account. I drop the lines. I put them where I want my entry to be and my stop loss to be. And then I click sell limit or buy limit, and then I'm done. I don't have to do anything. There, like I said, there are others. There are probably some that are more simple. As Steven said, they're probably out there. I haven't used them. I don't know what they are. I can only give you my experience. I have had a great experience with Trade Assistant. It's been very easy to use, and it has eliminated a lot of mental stress and work to calculate lots and get it in and click multiple buttons and things like that. We're into the 8:30 hour here, about 10 minutes in. No real big movement here on the indices. Let's see. Not much happening anywhere here. Just very quiet. And that's fine. I kind of anticipated that today. So, all right. I think there's no more questions there in this stream. So, you guys are more than welcome, like I said, to hit me up on Twitter. I can look at charts, setups. If you have personal questions that you don't want to put on the stream, if there's something that you're specifically struggling with or need help with, either psychologically or emotionally or self-discipline or trading plan, or you're wondering, what your strategy is if you're just not clear on that or whatever it is, my DMs are open. And while my social media following is still low and there's not, like, I don't have hundreds and hundreds and hundreds of people messaging me every day, I'm happy to get in there and interact with you guys as much as I can. So feel free to drop over on Twitter. And if you like this, please hit the like button. I do appreciate that. If you're getting value from this, if you can share, feel free to share it, either the stream or my Twitter stuff. I would love to get more people in here and helping others get to where we're all going with this. So we'll be back again tomorrow at 7 a.m. And markets will probably be moving, and we'll see if we can find a good trade setup to hunt down. So enjoy the rest of your day, guys. Be safe, happy hunting, and we'll catch you guys tomorrow.